Right behind me, you can see all of these majors are trading in the red. I'm actually blending into the wall. Technically, we've got all of these indices in correction territory now, with the exception of FTSE MIB, that's the Italian index, now also technically in bear market territory, so 20% off the highs. It has been another day of steep losses for European markets. I want to talk quickly about FTSE 100, though, the UK index. A lot, as you know and are aware, there's a big vote taking place next week in the Parliament. Unlikely that she's going to be able to get that vote through. But then we also had some very weak services PMI numbers this morning that is pulling down that index as well. So it's not just the broader risk-off playing here. It's also some of the political issues going on in the backdrop. But let's switch, though, and talk about sectors and see what the breakdown is. In terms of composition, we've got real estate, travel and leisure right up at the top. Also, autos finally seeing a bit of a bounce in some of the European autos. This is after a more constructive session between some of the German automakers and the White House yesterday. They're removing the threat of imminent tariffs on that industry. So we are seeing a bit of a bounce there. On the downside, some of the cyclical sectors are underperforming. Tech as well, another rough day for European equities. They're in line with what we had in the US yesterday. A very bad day for the Nasdaq. It's also playing as well in some of the chip makers in Europe that are hit by the supply chain effect. Basic resources also a little bit weaker. And then finally, oil and gas trading heavy as well. Don't forget, we've got OPEC meeting coming up the next couple of days. The expectation is that we would be seeing a production cut, but now in the last 24 hours, it appears as though consensus is shifting perhaps towards an extension away from that production cut, and we are seeing the spot price trade a bit heavy. That is impacting that sector as well. Overall, though, a day of losses for European equity markets. Back to you guys.